How are you?
Doing very well. It's been a very challenging few, well, I should say 20 months, but we're looking at our portfolios right now, and we are back to where we were in terms of calling them deep value portfolios if you give us a 5 year investment time horizon. I mean, we're seeing incredible values for
Well,
the kind of growth that our portfolios are going to deliver.
you know where I want to go. I got to talk to you about the crypto space. It's a world you know really well. We think about the FTX collapse, the bankruptcy proceedings today, the coming undone of Sam Bankman-Fried. You have been buying into some of the different names in the crypto space: Coinbase, Grayscale, Bitcoin Trust. Why should investors trust crypto? Why do you trust crypto at this point?
Yes, if you look at the blockchains, let's use the Bitcoin blockchain and Ethereum, what you'll find is they have the infrastructure, the technology has not skipped a beat throughout this entire crisis. In fact, the hash rate, Bitcoin's hash rate is at an all-time high, and that is a real indication of the security of the network. On Ethereum, we're seeing the total value uh, uh, staked at 24 billion. That is an all-time high. So we think the infrastructure is working beautifully. As far as Coinbase, this is an onshore regulated company and wanting to help shape regulations. Brian Armstrong, the CEO, and Alicia, CFO, have been leaning into what's going on right now and saying, okay, regulators, we need more clarity in order to protect investors. Those who wanted to get involved with certain types of crypto were forced offshore, and look at what's happened. So I think that Coinbase is going to come out
Hmm.
here looking very, very strong. It just lost a very big competitor in
Right.
FTX.
Well, what
Uh,
is the market missing though? Because that could be one narrative, Cathie, but at the same time, we haven't exactly seen shares of Coinbase rally since FTX's collapse. Do you think to
yeah.
you that represents potentially broader concern about just people's interest in crypto following FTX's collapse?
No, I think it's more fear. I think many people say we don't know what we don't know. And so what we do is we step back, put a little perspective into the situation here. And what do we have? So the entire crypto asset ecosystem is an $800 billion ecosystem. Apple is 3 times larger in terms of market cap. So that's some perspective. Many people are saying, well, oh, okay, is this another Lehman? Could this be, could we see the domino effect here? I've just given you one reason why. The banking system back in 08, 09, trillions and trillions of dollars, and it was the global banking system. Right now, we have, it seems, from FTX, $5 to $10 billion in creditors if as FTX has filed bankruptcy, they will be making claims. If you look at Lehman, that was $1.2 trillion in claims. So again, just trying to put perspective, this is fraud. This is Madoff. Madoff was $64 billion
Mm-hmm.
in claims. Again, FTX, 5 to 10 billion. Now, I know that crypto assets are, they attract a lot of attention. This is, the three revolutions we talk about all the time. A new monetary system in terms of the first global private, meaning not government controlled, digital,
Right.
rules-based monetary system. That's Bitcoin, a very big idea.
Hmm.
DeFi is a very big idea. And while that has been thrown into question in terms of, shifting from one exchange to another, we've had a lot of shifting around. But I think DeFi, in
Well,
terms of taking the middlemen out of financial services and making the ecosystem much more transparent with much less counterparty risk, is going to take off. It will continue to move forward, we believe.
Cathie, I think one of the things we're trying to figure out is how long that we think the industry will be feeling the ramifications of FTX. I mean, one thing we've learned, right, with SBF and FTX is what we didn't know. So how long do you think this goes on? Because you obviously have faith in it. You've been buying into it, and you think this is a good entry point at this point, whether it's Grayscale, whether it's Coinbase. But how long do you think we continue to feel the effect? And do you think there's more contagion to be felt?
Well, we always look for the whale in a situation like this, and if there was a whale out there, it was FTX and Sam Bankman-Fried, king of the hill. So I think we found the whale, and I'm sure there's going to be more fallout, but we see how big the whale is. And yes, a lot of people have lost a lot of money around the crypto asset ecosystem losing value here. But if we're right on the underlying technology and the underlying roles that Bitcoin and Ether, Ethereum are going to play in this new world, then I think we're going to recover pretty quickly.
You mentioned that FTX was a quote fraud. It's no Lehman or no Madoff. Give us an understanding of what your interactions.
More like Madoff.
More like Madoff.
Yeah.
Oh my gosh.
So,
yes,
well, give us an understanding of what your interactions were with Sam Bankman-Fried before this fallout, and have you spoken to him? Because I know you were at Crypto Bahamas along with many other people earlier this year, the FTX SALT conference.
Yes, I had a Zoom. My team and I had a Zoom with Sam before that conference. I think. They wanted to have us represented at the conference, and so I did give a presentation there, or I was on a panel. But other than that one phone call, just to set up, I have never talked to him, and he by the end of the phone call seemed to be distracted by whatever else he was doing. So that was my one exposure to him. And I think the thing that is shocking is how many people were very close to him. And one would have presumed, looked at all of the documents and got a sense of the books. The fact that so many people were completely fooled is quite shocking. I think he had this aura around him or something that caused people to ask fewer questions than might otherwise have been the case. It's very hard to understand.
Do you worry at all about, as you buy into Grayscale, Cathie, the whole world of the digital currency group and Barry Silbert's company? I mean, the various connections that kind of go back to FTX. Are you at all worried about a liquidation or anything?
Well, we know that the Grayscale investment trusts are the most valuable part of that company right now. And they are they're cash cows. They're revenue generating. We do not think, we think they're going to try and hold on to that, if nothing else. We're looking at a 41% discount of this trust relative to Bitcoin today. And so we actually think there's a lot of upside. Now, one of the things that we know that Grayscale and Michael Sonnensheim at Grayscale wanted was to convert this trust into an ETF.
Right.
I think what's happened with the fallout here might increase the probability that a Bitcoin ETF will be approved. I'm not saying immediately, but we know that, and even the newest SEC commissioner, Jaime Lizarraga, I think is his name, has come out and said, we need as regulators to focus on decentralization and transparency. What is the most decentralized and transparent crypto asset in the world? It is Bitcoin. And yet retail investors do not have easy access through a liquid asset like an ETF, which honestly, I don't understand, given that they approved a Bitcoin futures
Right.
fund. So, I think it might increase the odds. We shall see.
Well, and some have been wondering whether or not you're playing the arbitrage with GBTC right now. You know, is it that because of the trust deep discount at this point? Is that the thinking for you to kind of be moving more money into this name?
Well, it is one of the few securities. We have to own securities
Okay.
in ETFs. So it is one of the few securities we can buy. And yes, it's at a very big discount. So it is more attractive. Bitcoin, if they were to even liquidate it, we've got such a big discount relative to Bitcoin that again, we don't think they're going to. This is the most valuable property. I think they're going to hang on to it. And I think over time the discount will close. Don't know if it's because of a conversion to a Bitcoin ETF. I'm sure the regulators will take a very close look at DCG and the Grayscale Bitcoin Investment Trust. But we do know this is a grantor trust, highly regulated, highly regulated.
Mm-hmm.
I mean, we had to do our homework on it. And we know that all of the Bitcoin behind GBTC is in cold storage at Coinbase, and Coinbase has confirmed this. We feel quite comfortable with it here.
Cathie, we've talked Coinbase, we've talked GBTC. Are there any other opportunities in crypto that you see right now in the wake of FTX's collapse as prices have been beaten up?
Well, again, for our ETFs, we, as you mentioned, own Coinbase. We also own Square, and it is interesting that Jack Dorsey has chosen the most transparent, most decentralized crypto asset to center Block's crypto exposure to. And I realize he's trying to, from a developer community point of view, leave them on their own. But we do think Bitcoin, and you can see through the behavior of the infrastructure, hasn't skipped a beat, not one beat, more secure than it was yesterday, the day before, and the day before. So I have a feeling this is going to elevate Bitcoin in the eyes of not only the crypto world, but the investment world at large. And I have a feeling it's going to have more running room through the rest of the world. I think this is the way that this is Block's go-to-market to get into the rest of the world. And we think they're going to be very successful.
So then I'm assuming, Cathie, that you're going to hold to your Bitcoin forecast for, what is it, 1 million per coin by 2030. That still feels good to you.
Yes, and you can, sometimes you need to battle test. You need to go through crises to see who the real, to see the survivors, first of all, but really to battle test the infrastructure and the thesis. And again, we think Bitcoin is coming out of this smelling like a rose because of what I have mentioned previously. And I do think the one thing that will be delayed is perhaps institutions stepping back and just saying, okay, do we really understand this? And once they actually do the homework and see what's happened here, I think they might be more comfortable moving into Bitcoin and perhaps Ether as a first stop.
You know,
Because they'll understand it more.
you mentioned Jack Dorsey. I want to switch gears if I can. And I was thinking about Twitter and Tesla. Like I said, there's so many things that are going on in our world right now that I feel like you are the person to comment on. How do you make sense of Elon Musk, someone you know, you've talked to, you've been an investor in Tesla for a long time? Are you comfortable with his actions around Twitter of firing people, hiring them back, the verified check, talking about people paying for it and then taking that back? Do you feel comfortable with this name? And I should put out that, right, you own private shares of Twitter and have talked about wanting to own more.
Yes. Yes, we do. We owned Twitter for quite a while, and we sold it into the rumors that Elon was going to buy it because we knew there would be a lot of controversy around that. So it moved into the 60s. I think it got to 70, and we sold there and have been watching from the sidelines. But if you look at that model longer run, it has not delivered on the promise. And I think opening up the algorithms, which we think he will do, and taking away the kind of human-driven censorship and allowing the transparency of the algorithms that they do put out there, allowing people to question them, I think is going to be very healthy. If you look at the daily average users, I think the various metrics that you can count daily, they have been going up dramatically. So, I know a lot of people who basically decided to quit Twitter because they didn't
Well,
like the kind of censorship and so forth that was going on. So I actually like what he's doing.
it seems interestingly enough, though, that a lot of brands don't like what he's doing, Cathie, and we've seen
Right.
some prominent companies pull back or at least pause advertising on the
Especially
platform.
auto companies.
Of course, I mean that makes sense. If you don't necessarily want to support the guy who owns Tesla, if you're making competitive,
easy out.
yeah, competitive
Yeah.
vehicles to Tesla, but bigger brands that are worried about brand safety. And I'm wondering,
Yeah.
I don't know what
That's
you're seeing in your Twitter timeline, but I'm seeing ads that are not relevant to me anymore and not relevant to me now, and aren't actually ads that are for companies. They're more like ads for influencers these days. It doesn't seem like it's necessarily moving in the direction of increasing revenue from an advertorial perspective right now.
Well, I do think that this is not just an advertising vehicle. In fact, that probably might diminish quite significantly in terms of its importance longer run. You'll remember that Elon started his entrepreneurial pursuits with a precursor to PayPal. So a very long time ago, had this idea of a digital wallet, a super app like WhatsApp, in mind. And of course, took a big detour into another passion of his. We know he knows a lot about this world. And I think if anyone in the US can do this, I
Well,
think he can. I think he'll surround himself by the right business leaders. He's not going to do this himself. If you look at Tesla, he's not. If you look at many people say, "Aren't you worried about Tesla?" No, we're not, because of our work on electric vehicles. They are grabbing a disproportionate share, and will continue to do so, of a market that we think by 2027 will account for 85 to 95% of all cars sold in the world. So that's on automatic pilot. He's now working on autonomous, which we think is going to work. In fact, I just had the pleasure of riding in a cruise car in San Francisco, an autonomous car,
a
proof
GM.
of concept, a GM. Just wanted to check it out. And I have to tell you, I love the ride. And I know autonomous is possible because Cruise and Waymo are doing it. And we think Tesla is going to do it in a much bigger way. So that's Tesla. But on to Twitter, it really needed to be shaken up. And I
Do you
think it
think
was
he
all
can
tied
make
up in
it
knots.
be a great business and very profitable? And if so, how?
I do. I do. Think about the amount of data that Twitter has, and it's proprietary data. And think about the combination of that and artificial intelligence. Remember, he has AI expertise and experts. I know he brought in some of his engineers, and they are going to, I think, surprise and delight, heading for a super app kind of product. And, by our estimates, and you'll find this in our big ideas, I think it was 2021, the value of each customer in a digital wallet should be, and when I say that, the market cap associated should be in the 20,000 plus range, because it's not just for financial services. It'll ultimately be for commerce, and AI is the glue that's going to pull
Well,
this all together. And the data that they have, the data is the new oil. You've heard that. This is absolutely true in the case of Twitter.
Well, Cathie, I mean, the currency, Twitter as a currency has worked really well for you. You've got 1.5 million followers on the platform. A lot of people see what you tweet. We saw eulogies last week being written for Twitter. It didn't end up dying, as many people thought it would. But what would happen if Twitter went away? And are you concerned about that?
It's been, and yes, we speak from experience. This is an extremely productive social network for us. It is our most productive. And, it truly is the global public town square. I can write an open letter to the Fed and put it out over Twitter. Now, do I think the Fed's going to listen to me? No, I don't. But that they may listen, the Fed board members may listen to someone who might think that I have something to say, which is simply a question. Wait a minute. How can you be unanimous 75 basis points at a time? How can you be unanimous when there is so much conflicting data out there, including an inverted yield curve now at 75 basis points? That's crazy. I think we're going to look back in history and say, what were they thinking? Unanimous? Commodity prices are falling. You've got excess inventories all over the place. We're seeing massive discounting. I think we're going to see deflation, and then they'll make a move in the opposite direction. But we need a steadier hand than that. So,
wait, Cathie, when do you? Because you've argued this and you've put this out there in terms of Fed policy, in terms of deflation. When do you think it will come?
I think we're seeing it.
Okay.
I think if you look at a lot of commodity prices, not only are they down 30 to some of them 80% from their peaks, they're down on a year over year basis. In fact, oil itself is almost down on a year over year basis now. The big pushbacks on this call we get are wages and rents. We're seeing rent inflation reverse quite suddenly and dramatically. So what I think we will look back in history and say, this inflation shock was the function of a supply shock caused by COVID, supply chain problems afterwards, and even more problems after Russia's invasion of Ukraine. If I can just take 1 second, I would like to give an analogy to the late 19 teens. We were in the middle of the massive, most massive innovation the history of the world had seen: telephone, electricity, and automobile, all at the same time. But we had World War I, and we had the Spanish flu. Sound familiar? Now, that was much worse than what we've gone through. We've gone through nothing like that. But there were massive supply chain problems back then. And inflation peaked at 24%, right?
Right.
In June of 1920. And by June of 1921, it was minus 15%. So I think that our 8 to 10% inflation, which is where it was at the peak, is going to turn around, and we're going to see some very big surprises on the inflation front. And you know who agrees with us? The bond market. Look at what the bond market is doing now. The long bond yield, 380, 75% inverted. That's telling us that the bond market is saying recession and or big surprises on the low side of inflation expectations.
Hey.
And it's probably both.
Cathie, unfortunately, we only have a couple of minutes left here. One thing we did want to squeeze in, we've been talking about it in the newsroom, that AllianceBernstein is getting ready to launch actively managed disruptor ETFs. And from what I understand, you pitched them, years ago. How does that make you feel? And, to see a firm that you worked at kind of doing a very similar thing or looking to do something similar?
Yes, well, AllianceBernstein, I believe, got the first fully active, fully transparent ETF in, I think it was it was approved in early 2013. So that's when I put my hand up and said, I'll do that. And there was a belief that ETFs were not safe, or there were a lot of arguments against it.
Right.
Probably the biggest one was mutual funds, which are much more profitable. I would say the economics there are higher than ETFs. How does it make me feel? The more the merrier. I think this is a fantastic wrapper for the end consumer. It's fully liquid, unlike mutual funds. You have to wait till the end of the day. Transparent, fully transparent. That's what investors want. It is more tax effective, much more tax effective. We're seeing mutual funds that are down 30% this year,
right,
but they're slapping their investors with 35% in capital tax gains. And then finally, it's more cost effective because all of what you see is what you get with these fees. There aren't a bunch of hidden fees. So it's a great wrapper for the end consumer. I highly recommend it. And
Right.
we're happy that they are seeing the light now.